Hey, appreciate you guys taking the time to join us today on our class. My name is Matthias Allred.
I'm Dave Pettit.
And today we're going to be going over a really awesome loan program. This is a really fun one, but it's the USDA Rural Housing Program.
It's truly one of the last of the 100% financing programs.
Exactly. So we're going to get into it. We're going to go over the details, the guidelines, the highlights, and then we're going to show you how you can qualify for this loan.
Great.
So let's jump into it. All right, so rural housing loans, 100% financing with USDA. A lot of people are running around like little Bo Peep right now saying, where, oh, where has the 100% financing gone?
Is it really, something that's all gone away? Because as we know, things have changed in this industry, and there's really not. We used to joke if you had a pulse, you could get a loan. If you could fog a mirror, you could get a loan.
100% financing loan too, no down payment.
Exactly.
So guidelines really have changed quite a bit. They've tightened up quite a bit, and conventional, FHA, all other types of loans are going to requiring a down payment, but USDA isn't. Still
Right.
100% financing.
So it's not totally a thing in the past, right?
No, it's awesome. So
why USDA? People ask us this, why this loan program? This is the program that allows you to have the option of not having a down payment. So you can still put down a down payment if you'd like, but there's some good things about this loan, one of them being you don't have to have that down payment. It allows more buyers to purchase homes, so especially your first-time home buyers who might be a little cash-strapped for the down payment or want to take that money and put it into some new appliances or furniture or stuff like that. This is a good loan for that, and to help you accomplish home ownership while keeping that savings account intact.
yeah, exactly. So all right, so some of the program highlights is really, truly no down payment at all, 100% financing. All of these loans are low 30-year fixed interest rates. These rates are very comparable to FHA or conventional. It's a government-sponsored loan, so the rates are just right in line with where the market is.
Yeah, good rates.
This loan allows you to finance your closing costs and prepaids, which is really great. No prepayment penalties. That's a big deal coming out of this whole subprime bust. No prepayment penalties at all, so you can pay this off as early as you want. You can make extra payments without any problems. No monthly mortgage insurance.
That's huge.
This is a really big deal, especially because FHA just increased their monthly mortgage insurance.
Almost doubled it, right?
Yeah, they almost did. So no monthly mortgage insurance on the USDA loan. No balloon payments, no adjustable rate mortgages or anything. It's just a plain old vanilla 30-year loan.
Yeah, it's really a good loan all the way around.
So there are some income restrictions that we're going to talk about. Very moderate income limitations, so nothing to be too concerned about. And this is really just an excellent loan all the way around. So
we're going to talk about eligibility all the way from program qualifications, property eligibility, income guidelines, and credit guidelines. So program qualifications, let's jump into that right away. USDA does require a 45% debt ratio. We'll talk a little bit more about that in a minute. You can get away with a little bit more with an automated underwriting approval. We'll talk about that in the next slide as well. 620 minimum middle credit score.
620 right now?
Yeah, that's big.
That is. FHA and conventional have both moved to 640.
Right.
So USDA can still allow a 620 credit score.
So you get the three credit scores, Experian, Equifax, TransUnion, right? It's not an average, it's just whichever one pops in the middle. So if you have a 700, 620, and 601, 620 is where it's going to be.
Exactly.
Okay? 30-year principal and interest fixed, no interest only, none of that stuff, nothing wacky. And we actually have direct access to GUS, which is USDA's automated underwriting system. So when we talked about automated underwriting up there, USDA has their own separate
approval system,
and not everybody has access to that. In fact, that's one thing that we're really proud of is we do have access to that. We're one of the few in the state. But make sure that whoever you're getting pre-approved through is running your approval on GUS, because there are some quirky things with USDA, but you can find out right up front.
Yeah, exactly. And the other thing we need to talk about is the 3.5% upfront funding fee. Most loans nowadays have those. FHA has an upfront mortgage insurance. VA loans have an upfront funding fee, and USDA does also. Now, they recently changed that from 2% to 3.5%, and that's to cover the additional costs of administering the loan and to make sure that they never run out of money.
Right.
You know, they ran out of money last year in 2010 for just a few months. And so they changed this to 3.5% to make sure they don't run out of money again, so they can keep this program moving along.
Right. So hopefully we'll see that come back down in the future, but for right now, that's where it's at.
Yeah, exactly. And again, that's nothing that you have to pay for out of pocket. That gets wrapped into the loan as well, so you don't have to spend any money on these, just like your FHA and your VA.
Right. So then we're going to talk about debt-to-income calculations. How do you calculate that debt-to-income, and what does it really mean? So one, this is what you do. You simply take the proposed housing payment, and that includes principal, interest, taxes, homeowners insurance, and homeowners association or HOA fees where applicable. And then you add your monthly payments that show up on your credit report. So like your car payments, your credit card, student loans. So what are some of the things that won't show up on credit?
You're not going to count utilities, cell phone,
Insurance, stuff
car
like that,
insurance,
right?
health insurance, groceries.
So we're talking about just two things. One, the housing payment, all of those things combined. And then two, the debts that are going to show up on your credit. So nothing that's not going to show up on there. You take those numbers, you add them together, and you divide it by your gross, so that's key, not your net, but your gross monthly income to achieve the debt to income ratio.
Okay.
So an example, house payment total is $1,000 plus a $100 credit card payment and a $400 car payment. $1,500 total, right? Your gross is $4,000 a month, so you divide $1,500 by 4,000, and you come up with a 37.5% debt to income ratio.
Right. Now, your loan officer, when you sit down and get pre-approved, he's going to go over all of these numbers with you and make sure that you're going to qualify for the loan. But as a homeowner, as a potential buyer, you need to understand what are some of the guidelines that you're going to need to face and make sure that you're really going to be approved for this loan.
Right.
So here's an example of a USDA loan. We're going to do a purchase price of $200,000 and no down payment at all. This is just awesome. So your loan amount is going to be the purchase price plus the USDA funding fee. So your loan amount is going to be $207,000. The interest rate, for our example, is going to be 5.5%. And just remember, interest rates are right in line with FHA and conventional loans. Generally, we see about a 0.25% difference, but just phenomenal interest rates right now.
Yeah, good interest rates.
So for our example, just today, we're going to do 5.5%. So your principal and interest payment is going to be $11.75 Okay, your monthly mortgage insurance with USDA is $0, which is a big deal. That's going to save you. I think FHA on this example is probably $150 somewhere right in there. So really awesome to save that on the USDA. Your property taxes, as an example, could be $150 a month. Homeowners insurance, $40 a month, and HOA fees, $55 a month. So your total house payment is going to be principal and interest, taxes, insurance, your mortgage insurance. We don't have any on this example,
right?
And a HOA fee. So your total payment is going to be $14.20
Right. Now, and that's just for, again, the sake of calculation. That HOA fee, for example, you don't pay to the mortgage company, but they do include that when they're calculating debt to income ratios.
Yeah, exactly. So
let's talk about the property eligibility. Location, 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 right? You always hear that in real estate. But here it really does matter. The approved area, there are approved areas. So we're going to show you how to check on that.
Right. USDA loans, it's the U.S. Department of Agriculture, and generally they're called rural housing loans. Mm-hmm. So a lot of your metro areas aren't going to qualify.
Right. Now, property types, you can do single-family homes, condos, and townhomes, but you cannot do investment properties, income-producing properties like duplexes, triplexes, fourplexes, stuff like that, like you can on FHA. You can't do that with USDA. You can't do mobile homes, and this isn't a fixer-upper loan like that FHA 203K rehab loan that you can also find more about on our site.
Yeah, exactly. So there are some income eligibility requirements. USDA is going to calculate all of the total household income to qualify for this loan program, not just who's on the loan. So, for example, if you've got a husband and wife that both work, but only the husband's going to be on the loan, USDA is still going to want to know what the total household income is.
Right.
So wife's income as well.
Correct. Or mom, dad live with you and get disability or something like that.
Or Social Security or something,
right.
Yeah. So there are some allowances for child care, and the income limitations are based on the number of people in the household. So, for example, in Utah County, a family of 4, the income limitation is $74,900. A family of 5 or more, which isn't all uncommon in Utah County.
Uncommon, right?
Family of 5 or more is $98,850. So there are some income restrictions,
right?
But again, they're not severe. Most people are going to qualify for this program.
Right. If you have questions or concerns about income eligibility, then you can go right to USDA's website. You can link to it through ruralhomeloans.us/eligibility as well.
Yeah, if you check there, there's links that go right to USDA's website. You can pull up what county you're in. And find out what the income limitations are. You can also give us a call, and we'll look those up for you.
So let's talk about credit for a second, the credit score eligibility. Like we talked about, a 620 minimum credit score, that's that middle credit score again. No late payments in the last 12 months on anything. no open collections or judgments, and then 3 open and active trade lines. Now, on the collections and judgments, there is a tiny bit of leniency, right?
There's a little leniency for medical collections and stuff, but they're not quite as lenient as FHA.
Yeah, so if you have questions about those, we'd be happy to address that specifically, but that's USDA's general guideline.
Yeah, exactly. So here's some myths about USDA loans.
Ooh, we gonna buy us a house.
Yeah, exactly. We got a picture of Dave and his family out here.
Yep, right up from Louisiana.
So here's the myth, though. Some people think that USDA is just for those country loans or farm loans or people, way out in the sticks type of thing. And that's really not the case. Here's a few examples of areas that qualify. This is Park City, for example. That's not that rural. This is one of major resort destinations. People come from all over the world here.
Exactly.
So it's really not out in the country. This is a screenshot of the new Walmart down in Saratoga Springs.
Right, that area is just blown up, right? I
Yeah,
mean, there's so much stuff down there. Eagle Mountain, Saratoga Springs.
There's big shopping and everything right in the area. So,
and that's all rural. So those areas are eligible for this program.
yeah, exactly. And we thank your parents, by the way, for sending up that picture of you and your brothers.
Thanks, Dad. Thanks, brother.
Okay, so location. What areas are going to qualify? How do we find that out, Dave?
So we can go to USDA's website again, or we can go to that ruralhomeloans.us/eligibility, and you can search via maps or specific property addresses. So we'll show you examples of the maps that are on the site, or you can actually type in the address if you have a specific property in mind and check right like that.
Exactly. So there's certain areas that just aren't going to qualify here in the state of Utah. Salt Lake County, Davis County, Weber County, there's nowhere in these counties that qualify.
Right.
They're just they're too populated. It just doesn't work. Some counties have areas that do work and don't. For example, Utah County, Cache, and Washington counties all have areas. In Utah County, we'll show you some maps of that. Cache County, right in Logan City itself, doesn't qualify, but a lot of the outlying areas do. And in Washington County, St. George City itself doesn't qualify, but again, the surrounding areas do, like Washington or Santa Clara.
Hurricane, stuff like that.
Exactly.
Utah County, Provo isn't going to obviously go rural housing, but Payson, Eagle Mountain, Saratoga Springs,
Yeah, exactly.
Spanish Fork, stuff like
In
that.
fact, here's an example of Utah County. If you look here, this dark orange color are the areas that do not qualify. And so right along the I-15 corridor as you're coming through Utah County isn't going to qualify. Once you get south of about Spanish Fork, you're going to find these areas do. So Salem, Payson, Santaquin, those areas do. And then up here west of Lehi is going to qualify as well. So, in fact, here's a close-up of that west of Lehi area. You'll notice the Jordan River as it comes down from Salt Lake into Utah County. That's kind of the dividing line. So everything east of the Jordan River into Lehi doesn't work, but everything west of there is going to qualify for this program.
And again, if it's something that's really close, you can go right on the USDA's website and type in the exact address, and it'll tell you whether it qualifies for this or not. Or we'll be happy to help you with that as well.
Yeah, exactly. As always, we're ready to pull up those addresses for you too. So
yeah, got some great resources for you guys. Ruralhomeloans.us, great site that Matthias has put together for eligibility and just resources. Kind of put you in touch with exactly what USDA requires.
yeah, make sure you're going to qualify for the program. So awesome. What do we do next?
Well, you're going to call us, 505-4300. We're going to get you pre-approved and let you ask us any questions about the rural housing. We want to help you guys out with this. Once you're pre-approved, we'll be happy to put you in touch with one of our real estate partners, right? We like to work with people who know these areas. We firmly believe in people being specialized in what they do, and there are good agents that we work with that know this rural housing program inside and out and what qualifies and what doesn't.
Right, and if you already have your own agent, let us talk to them and make sure that they know what we're going to be doing with this rural housing program, just so that they can be on board with us too.
Right. And guys, honestly, if you have questions about this, even if we're not your lender of choice, we'll be happy to answer any questions that you have about this program. It's very important that you understand what you're getting yourself into.
Exactly. So we've also put some additional free resources available for you at our UtahHomeBuyerEDU.com.
Yeah, this will go through some additional trainings on FHA. You can find information about FHA conventional, rehab loans, stuff like that.
Yeah, as well as just some great classes. We've got 25 things you should know before you buy a home and different classes like that. So check that out and attend some of those free classes. It's really going to help you save some money as you go through the home buying process.
Absolutely. So be our next happy homeowners and keep your savings intact. Keep it in your account.
Exactly. That's one of the highlights or benefits of this USDA program is no down payment. Even if you've got some money saved up, sometimes it's great to keep that money in your savings account for a rainy day, or to do some improvements on your home.
Yeah,
Type thing. So
make the house your home.
our objective is always going to be the same as yours. We want you to get into the right home with the right loan program that's going to be the best fit for you and your family.
Absolutely. So, again, our contact information below. You can always feel free to contact either one of us. We are your rural housing experts, and we appreciate your time today.
Hey, thanks for stopping in. We'll see you on the next class.
Thanks.